Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Today is Thursday. It is, where are we here? I think it's like the 21st or something, yeah, of May. So, marching into the last week of May. Welcome to, actually, I guess we're about halfway through spring right now. You never know, all us locked up in our cages here. But anyway, happy Thursday and a TRI. Thursday is a special day for us. That's when Julian comes on and he gives us what we call affectionately the baby powder report. And this also too was sort of the end of a big marketing campaign that Julian and David and Fjord also helped. And of course, I throw in my 2 cents every once in a while. Campaign that we just had, and I have to say I was pretty impressed with how everything went with that. So if you found it of value and you benefited, awesome. 1 + 1 = 3. PMA for the win. You know, Brian, that's what I'm all about. So hopefully we're doing some positive in this world. I have been hearing a lot about watching videos and stuff. In fact, I think I even tweeted it out. I don't know whether you want to subscribe to this gentleman's newsletter. I like to just get different perspectives. You know, that crazy Crypto Chico guy, he's a lot of fun to listen to. I'm not really, I don't even know who this gentleman is, but I thought he made a very good point about, we get into phases like we had with that Bitcoin rally where people just sort of forget about all the potential disasters that could be looming out there. And this gentleman's quite concerned that even though technically Americans are not supposed to be trading on BitMEX, it turns out a lot of you Americans are still trading on BitMEX. So as a result, that opens up the doors to the sleazy ambulance chaser lawyers, which of course there are one or two down in the States that love to just pile on. And in a weird sort of way, it's almost like you can see the groundwork of this big class action lawsuit coming down the pike. So listen to what he has to say. I don't necessarily subscribe to his newsletter, but what I do like, of course, I've been talking to you guys at length about how I would ideally like the Bitcoin price just to calm down and let's just do a nice, healthy, normal correction following this halving event. And let's get rid of some of the excess, some of the fluff, some of the FOMO, moon talk, blah, blah, blah. And just get back down to business, right? What is a natural, healthy looking trend? So, I do find it interesting that now we're on the other side of the halving event. There really isn't any sort of, catalyst for us to be thinking about in the future. Price is going to head up into that. We're in kind of a black hole right now. And if anything, you've heard me go on at length about my celestial events and all that kind of fun talk. Me personally, I'm getting ready for the next wave here. Ironically enough, the next wave of selling might not have anything to do with COVID. But I can tell you, what are we supposed to be thinking when we're in the month of May? All right, so with that rant out of the way, let's get on with what we're doing in the markets. Same old US dollar, and actually maybe this is going to become our new norm. We're kind of stuck in this trading range after the crisis. And really probably best just to wait for this range to actually break out either higher or lower before we make any grand conclusions. And I think that's about as far as we can leave the US dollar index conversation right now. Keep, those in Europe, keep your eye on that euro. If it craps out through the bottom of that recent consolidation range, all hell could break loose there. But if we can slowly slide through all this, get the economies reopened and all that kind of fun talk, well, maybe we have dodged the crisis for now. I did find it interesting, stocks sort of languishing right up at the top end of the range. They do have permission if they want to go higher. We took out these highs. And interesting too, and I don't know whether I have it on this chart or not, but you could make the argument down in here, and I think I did this before, that we might be doing things like head and shoulders is here. So like something like this. So that it's tough to be exact about this, unfortunately. something along those lines. I mean, we had the AB equals CDs. That was a fantastic price objective. The head and shoulders, believe it or not, all you do is you just draw a line from the bottom of the head back up to the neckline, and then you just project that exact same distance off of the neckline, and that actually is a bullish objective. That's all the way up at 3,100 there on the S&P 500 futures. And I think we did talk to you guys recently. This gap is on the weekly price chart as well. So, I mean, they do still have permission to take the market higher. I don't see any M's outright. We did have a little one here that looked like, uh-oh, all hell was going to break loose. But here we are, just probing higher. We do have, of course, options expiry coming up tomorrow. We looked at them. There's a lot of incentive for them to keep the market above 295-ish on the SPYs. So, heading into the weekend, my hunch is stock market's probably going to be just sitting there. Unfortunately, I hate buying stock this time of year. This is a horrible time of year to be buying stock. So, we even had our TRI SOF meeting, what was it? I guess it was 2 days ago. And we kind of collectively agreed, Zach and I, we run a little options account together. We're kind of like, you know what, maybe let's just cool our jets. If we got a bunch of positions on, if they run, I'll show you another one. Kavarkanator got paid here today. If they run, great. We're going to be selling into those rallies, but I don't know whether I'm really too jazzed about loading up on any new stock right now. But anyway, that is what it is. One thing that did catch my attention, thinking about risk on, risk off today, is crude oil actually hit that bullish bought objective we've been talking about for a while. So, remember we had drawn the AB, CD. You can break that AB equals CD into quarters for the CD leg. Try and enter off of the 25, and you can see the structure, and move stop to scratch, move stop to trailing. Remember we had talked recently about how if we were in this trade, I didn't take it. I'm not really jazzed about oil anymore. I've seen a bunch of oil stocks have all jumped up here. I mean, there was money to be made, but I don't know. I just don't like oil, and I think it's a 20th century story. I'd much rather be putting my money to work elsewhere, but that's here nor there. Anyway, point of the matter here is had you been trailing your stops would be here. You just sit there, do nothing, and then ding, 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 ding. You got filled at your profit objective. Way to go. So now the oil is on this contract, and I'm looking at the August contract here. You can see we're finally back at least to some serious resistance, right? So if I just go like that high, gee whiz, look at that, doink, doink. We're right up in that neighborhood now. This is what we call horizontal support and resistance. So somebody came in here and hit the bid when price got up to these levels again. And then you can see that happened again when we got up into this area. So these all now become important reference points. And so you can see there's a bit of a ceiling right here, right? Like I said, had I been trading crude, I would have bought some at 28 and change and let it go there at 34 and a half. That would have been a very respectable trade. The only problem with trading this, that's $2,000 a contract. Jesus, that's a lot of money. One contract there, that was basically about $6,000-$7,000 in profit. That's playing with the big boys. And Brian, I'm a cheap ass. I don't like to spend that kind of money and take like a $2,000 risk on a trade. Ugh, that make me sick. I could have played this through the options market. Anyway, long and short of it here, that I think that oil trade is done. And interestingly enough, sell in May, walk away, blah, blah, blah. My hunch is they're probably just going to bring this thing right back down and do just a good old 50% retracement. So how ironic. The breakout was 28, and probably after the seasonal correction, we're going to just work our way right back down to 28. Oh, well. So, one thing I'm a little concerned about here with the stock market is we have been noticing, and actually I don't see too many people talking about this. I had some charts up for a while that were sort of illustrating the relationship between Bitcoin and the stock market. And I get the distinct impression Bitcoin was leading the stock market. But I don't know where the hell I've done with those charts. Yeah, I don't see it. Anyway, it's a fun study. But if I don't have it in front of me, how can I show it to you? So we'll leave that for another day. Anyway, and actually, where were we? So we were talking risk on, risk off. We won't go down the rabbit hole of Bitcoin leading. I'll have to go find that chart again. But where were we? We were over here, right? Nope, that's not the screen I wanted to show you. Should be over here. Hey, there we are. All right, so like I said just a minute ago, if I was long crude, I would be taking profits and counting my profits right now. Do I really want to go and buy the stock market? Red boxes. What are we supposed to say about red boxes? Red boxes are not usually, like socially buy, bullish. They're usually sell, cautious, warning. In red boxes, enough is said. Same sort of conversation now as U.S. dollar bond market just parked in this channel. And they always say the bigger the channel, the bigger the run. So when this son of a bitch breaks out, holy crap, get ready. There's going to be a big move. But it ain't today. We did talk about, I personally believe that we're coming into a big catalyst here the end of June, beginning of July. So we did talk about putting on a strangle trade for, say, like July options that would expire sort of the middle to the end of July. So you have yourself a nice, few weeks before expiry left on the option. We went through the strangle, buy a call, buy a put, and if you do see some serious volatility, you make money. That's probably the way that I'd be approaching this if I, hold a gun to my head, Brian, you got to do something. I'd say, okay, throw on a strangle and let's see where this channel takes us. And frankly speaking, I don't know who's going to win this battle right now. Interesting, our conversation about stock market, and then we were talking about small cap market. Interesting to see small caps broke to new highs again here this morning relative to the big caps. And we're now pressing up against these highs. That high there was, what does that say, 0.055, and we're at now 0.055. We're at that same level. Hats off. Wanted to give a big shout out, of course, to my co-host, director, producer, cheap bottle washer, and all-around nice guy. Kevin was unable to participate in the Funco yesterday. We had kind of a cheeky little conversation about that. Thank you very much for the profit, sir. Appreciate it. But here's one that Kevin did get paid on today. Way to go, Kevin. All-star. Everybody should look at this chart and go, gee whiz, what a surprise. TRI people are in there buying W's and banging out doubles. Well, business as usual. So, please understand, if you are going to play the penny stock market and you're going to play these junior stocks, you are going to have the duds. Thank you, Tim Draper. Rebonds, perfect example of a dud. But if you take 20 bets, no more than 5% of your portfolio risk on any one idea, and you have maybe, let's say 3 or 4 of them are Tim Draper assholes, okay. But you get 4 or 5 that go and double on price. And keep in mind, Mr. Draper, he's still alive. He's a dick. I hate you, asshole. That's the conversation of Gordon Gekko. Go watch the movie Wall Street and his fight with Teldar Paper. It's exactly the same thing, Board of directors do things that just piss shareholders off to no end. It's capitalism. Anyway, point of the matter here is, hopefully, your system that you use, you vetted it, it produces positive results more than 60% of the time, let's say. I think we can shoot for 66 2/3. And if you're banging out doubles and, even take 100% profit if you want, the statistical odds should work in your favor. And that's really what we are as traders, is we're statisticians. So, point of the matter here today is Mr. Kavarkanator, statistician, ran his model, got paid, kudos, well done, rinse and repeat, on to the next trade. Great job, Kevin. So proud of you. Really say, day in, day out, I really, really love the group of people that I'm working with here at TRI. I'm so proud of all of you. All right, heading on over to the corn. Bitcoin, Bitcoin, you know. Did a little bit of sort of ranting there earlier about what I was seeing with price action. You guys have seen this chart repeatedly over the past few days, so there's really nothing new here. I had said recently that, of course, if we do end up going and smiling out here, that's probably problematic. And, uh-oh, you can see what happened today. And also we talk about now we've got smiles within smiles, right? There's a smile, and there's a smile there. Oh boy, this market's really smiling at us, isn't it? You all know what it's supposed to think if you see the market smiling at you. So, with that said, definitely tempering my bullish enthusiasm right now. I don't know whether I really want to get sucked into sort of lower time frame diagnostics, predictions and stuff like that. I don't know whether I did it in the free video yesterday or not, but you can really get a really powerful message from the market if you just understand these M's and W's and what's the market telling you. If you change it to a line chart, I mean, what do you see? I see M's, 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 M's. And if that's the case, then gee whiz, that means, man, there's a hell of a lot of resistance up top here. Some market keeps getting bid up and somebody just keeps whacking it back down. So, me personally, I just like the idea, sell in May and walk away and just sit on the sidelines. I don't have to be long. I don't have to be short. I don't have to do leverage trading. I suppose hold a gun to your head. It wouldn't be a bad idea to have a couple puts on the books. But really, on balance, I think I told you guys. We just have a little local group here in Vancouver, and we had like a 55% annualized gain heading into a week or two ago. So we were like, fuck it, man, let's take profits. I mean, what the hell? It's not such a bad idea. And then, of course, now we have these ugly structural messages here. And now it's definitely like, okay, no way I'm buying right now until this stuff cleans up. I think the general message I've been conveying to the public is this kind of image. And I still think that we're basically doing this pattern. This was the 2016 halvening event. And in a weird sort of way, you can kind of see, pre-halvening pump, pre-halvening dump, halvening event, counter trend rally, consolidation. I'm getting the feeling that this is a head fake move, but it might not be. I mean, we might just shit the bed here. Who knows? But, like our little study here, you can see that they kind of goaded the market into thinking that it was going to dump, and then we just sort of calmed down and went sideways for a few weeks. That's actually what I think is going to happen here. It's just purely my opinion. Obviously, no guarantees from the management. Right now, of course, if I was bullish, I would just be like, I got to wait and can I please see some sort of W kind of price action? So there just isn't there. And then, like I said yesterday and the day before, I actually like this. This is good, in my opinion, if we do this, versus had we ripped up here to this megaphone top, and then I would have been like, oh, God, this has got trouble written all over it. So I'm considering this normal, healthy, natural. We had a big fundamental driver. We're on the other side of that. Now we just have to clean up. That's really the way I'm looking at this right now. I have to say, just because Bitcoin and maybe Ethereum and Litecoin, the big boys, are calming down, that doesn't mean there aren't opportunities around this crazy crypto space. Here's another one. I don't know whether we've talked about it recently. I can't remember whether I mentioned it to you, but gee whiz, look at that beautiful W. Nice railroad tracks on storage. Nice rally off the lows. Test the lows. There was a nice little FU probe against these lows. Then another W. And gee whiz, there's the end result. And Kevin was kicking himself because this was kind of like Funko. Should I buy some? Should I buy some? Should I buy some? And he was like, oh, well, maybe I did buy some. So, Kevin, did you actually ever get filled on this thing?
No, I don't think so.
Shit. All right, well, then we know it's going to moon.
Yeah, probably. It's going to rocket now. It's all right.
Dude, you're awesome. You just keep on being you. You're just the best. If I was interested in participating in this thing, I think what the prudent thing to do is probably draw your reload zones. Whoops, actually, that's not what I wanted. Draw your reload zones. Gee whiz, what a surprise. 78.6, just basically sitting right down at this original double bottom level. I mean, hell, you could probably like clothesline bid. My hunch is if you drill down to like a lower time frame, there's probably some nice gaps and stuff in there. So don't chase. All right, we all know that. You're not allowed to chase. But you want to work some stink bids against bottom end of ranges? It's not a bad idea. So I wanted to mention that to you. Good looking little coin. And, I think what's really important in the crypto space now is understanding that your coin, your idea, it has to have some use. Why is this thing in existence? And, I like the storage story because it is a very practical application of crypto that I think actually is extremely value added. So it's a good story. Just finish off with our little blurb about poop coin indexes. I get the sneaky suspicion a little trap was laid there. Now, if this did actually empire out here, actually, and I think I drew this for you yesterday, at the bare minimum now, if this does empire out here, we probably should be thinking like 50% rules. So all that's going to do is just bring us back down to this original consolidation level. So if that actually did empire out there, that actually isn't a terrible trade idea. The only problem here is you got to really see the signal come in on the other side of this trend line. So you're going to probably have to wait for tomorrow, beep, and then if we're down below here pressing through these lows, then the empire fires and away you go. So, and I've been sort of talking about this with you guys, is that we were getting awfully close to the top into actually shorting windows. So it doesn't really surprise me that we're starting to get a little heavy here. So be careful, everybody. It's your money. Try and trade, if you're going to be trading, try and trade setups. You have 3 unrelated reasons for considering risking your hard-earned money in the marketplace right now. And a great testament, and I think I even mentioned this in recent videos and stuff, is look at this image. Is there really a great edge for a professional trader to go and take a position when this thing's sitting right in the middle? I mean, we could go either one way or the other. So that's kind of my philosophy right now is, do I really need to take any risks? Not really. If this cranks back down into, sky's falling, wrecked, all right, well, then I'll start thinking about stepping back in on the long side. But right now, I'm just cooling my jets. All right, everybody. Hope you got some value out of that. Have yourselves an awesome day. PMA for the win. All the best, and bye for now.